Good afternoon, this is Dan Haugh, PTI Securities and Futures, coming to you for your Monday afternoon wrap-up for November 7th. Overnight, the equity range was very wide. We had a 27-point range in the SPOOs. The Asian markets were kind of mixed. The European markets were down. There was another meeting in Europe about the finance ministers in Brussels, hopefully to give all the details of the plan that was supposedly worked out 2 weeks ago but yet put on hold last week, the continuing soap opera. The only fundamental news we had here today is consumer credit was considered better because it went up to 7.4. I'm not exactly sure why we're still considering more credit a good thing after what happened the last couple of years. The fundamental data out of Europe really was kind of bad here today. European stocks kind of took it on the chin because the European retail sales was bad, and also there was some, the Italians had to put off their bond auction because of the interest rates, and the sort of 10-year note was postponed, and they're going to have a 1-year note auction instead. The continuing drama in Europe, where Greece, new government, Papandreou is out, a new person is going to be running it. That was considered actually a marginal positive because they're more likely to get the austerity package. And it appears that in slow motion is the exact same thing that is on again, off again in Italy. Berlusconi is supposedly out, and he's in, and I mean, we were getting reports on Facebook, his own personal Facebook page, that he was not going anywhere soon. So the European is still to be continued. In any event, there was one notice that came out of probably early afternoon our time that said that the finance ministers of the ongoing meeting into the night in Brussels was saying that they're going to get their act together, but the time frame that they were thinking of was 2 years, but that still was good enough to actually move our market. So this is absolutely amazing that we're looking for any reason to put this European thing behind us, except it just doesn't seem to ever get there. In any event, the SPX closed up 7 at 1261. The Dow closed up 85. You can thought it was very boring, but once again it closed at 1268, above the 12,000 level. So we're going back and forth at 12,000 level. Seems like at least once a week. The Nasdaq closed up 9 to 2695. The 10-year note, the yield dropped to 1.99, back below 2, which is kind of interesting. Gold closed very strong here today, up $41 at 1747. So we had kind of an unusual day here today. We had gold that was very strong, the stocks were strong, Dow up 85, but we also had bonds up today. So this is not typically the risk-off trade, because realistically the bellwether, the thing that we've been watching the most closely here, is that the bonds kind of indicate that the fear is going on here. And if bonds are going up, that means that there's more fear, and usually that means stocks have been heading down, but today that went the opposite way. So we're going to continue to look for the bonds, because with the 10-year yield back below 2, that's getting into the lower end of the range, which means that there's obviously some fear out there. It's been Dan Haugh, PTI Securities and Futures.